Wouldn't it be awesome to have an office that like looked out on a view like this? Check it out. You just work at home like we all do, and that would be your outside view. It'd be pretty cool, huh? Welcome in, rock stars, to the Rockstarflipper YouTube channel on a beautiful, and I mean absolutely beautiful if you didn't see it, Saturday afternoon from Tampa, Florida. We're inside the house, drive time with Dave's house, so you might not recognize the background, but I am in a very positive mood, but I gotta give you guys a negative video. I gotta lecture you guys because I'm gonna tell you an email, and we've done this in the tax talk a lot. You guys saw the video title, I'm sure, excuse the camera here, but you guys send me emails all the time. There's Drive Time making a cameo in the background. He just strolled right on by if you didn't see him. Look, 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 he can't get away. See that? Oh, he can't get away. He did a drive-by. He did a drive-by with Dave. Anyways, you guys email me each and every day asking how to track inventory. How many of you have actually sent me an email asking me how to track inventory? So here's my lecture to you guys for the day. I don't actually know what that question means, how to track inventory. I think I know what you're trying to ask me, but you're not clearly conveying that question to me. And so let me explain this to the people that don't understand, or the people that may have emailed me asking that question, and why I have this response. So what I think most people are asking me is, when they go out and they buy inventory to sell, they want to keep track of what they've spent on that inventory, how much money they've spent, and when said items finally sell, they want to keep track of what that item sold for and what its cost of goods sold was, and then what they have remaining in their inventory after accounting for all of those sold items. And that's perfectly, that's an awesomely logical question to ask, because those are important things to know. You have to know all that for the end of the year for tax time, which is right now, which I've been working on my taxes this past week. So let me clarify, there's three ways to really keep track of that accurately, and there's kind of, I think, some confusion from people about, another cameo, about exactly what inventory tracking is and what cost of goods is in a lot. Now, any of you that are familiar with this, if any of you are CPAs, feel free to fast forward this video. I totally understand. But if you're still confused about inventory, if you're trying to do your taxes, or you're just getting started this year and you want to make sure you're doing it properly, I'm gonna show you the three ways to do it. And so, let's talk about what they are, the three ways. There is line item accounting, there is cost averaging, and there is zero cost inventory going forward. So let's talk about what these three are. Let's talk about the line item accounting first. Number one, this means every time you buy an item, whether it's one item, 100 items, 1,000 items, whatever it is, you are going to go into either a spreadsheet, basic, Microsoft Excel, you're gonna go into QuickBooks or GoDaddy or whatever system program software you use, and you're gonna input each and every item and what you paid for it. So column A is gonna say Nike t-shirt, Adidas t-shirt, Nike shoes. You're gonna have a list of every single item, and you're gonna have column B that's going to say the prices of all of those items. Nike shirt, $1, Adidas shirt, $2, Nike shoes, $5. All the way down, or if you're in a software, it'll keep track of it for you. And then when the item sells on eBay or Amazon or however you sell it, Macari or Poshmark or locally, you are going to either manually in a software spreadsheet remove that item from your current inventory. You're gonna move it over to its other column as sold and the price it's sold for. And then you'll know the cost of goods. You paid $1 and you sold it for 10, and you're gonna have your profit of 9. And then on the left side, at the end of the year, another cameo from another DePristo, see that? At the end of the year, you are going to have the items that did not sell over here in your left column or in your software still in inventory, and they're all going to have a price next to them, $1, $3, $8, whatever it is, and it's gonna total up, and that'll give you your cost of goods remaining in inventory. Remember, at taxes at the end of the year, you are only allowed to account for the cost of the goods that actually sold. What you paid for the items that sold is what you will put into the tax format, into the paperwork. And so that's number one. Now, I don't recommend this form of accounting. And you're gonna say, well, you just sat and talked about it. Why don't you recommend it? And here's why I don't recommend it. If you're only buying 1 or 2 items a day or 3 items a day, either because you're not very big or because you buy high dollar items, perhaps, certainly you could do that. You could sit down and put in a couple pieces of inventory in what, 5 minutes? Okay, great. What about those of you, which is gonna be a lot of you, that go to the Goodwill outlets, to the bin stores, and you buy 500 pieces of clothes or 100 pieces of clothes, or maybe you go to Plato's Closet and buy them out and buy 300 pieces of clothes. Are you going to sit down and input manually 300 line items day in and day out? Are you going to pay someone to do that for you? Are you going to hire a girl or hire an in-house bookkeeper? Are you going to sit down and waste hours of your own day? Absolutely not. I don't think you're going to do that. So we move on to the second form of accounting, which is cost averaging. And I'm doing this even though I know I've talked about this before because it is tax time. A lot of you are new and a lot of you don't understand this clearly. So I'm trying to make this as clear as possible. Cost averaging. So we go back to our spreadsheets. We've got our column A. Now instead of writing down 50 items that we bought, we're gonna do 1 line item. It's gonna say Goodwill outlet. I went to the Goodwill outlet today, or I went to the Salvation Army, or I went to the Goodwill retail, or whatever. I went to a yard sale and I bought column B, 10 items. 10 items. Column A, where I bought it from. Column B, 10 items. Column C, $10. That was my purchase price. Column D, $1 cost average. Divide price paid by items purchased, number of items, and I get my column D, which is average cost of goods. $1 for items. I bought 10 items, I paid $10. $1. And I'm gonna do that every day. I'm gonna insert how many items I bought today, how much I paid, and what the cost of goods average is. And at the end of the year, in the column of how many items I bought, it's gonna say you bought 500 items this year. And then in the next column, it's gonna say you spent $500 on those 500 items. And then the last column is gonna say your average cost of goods for the year is $1. Now the last piece of information we'll need is how many items did we sell this year? We don't have to worry about taking individual items in and out of inventory and making sure it doesn't matter. You're gonna go into eBay and you're gonna total up every month. You can do it, or you could wait till the end of the year. I'd recommend adding it at a monthly time. So you'll go and say, well, at the end of this year, I sold 20 items a month. I sold 240 items out of my 500. I know my cost of goods average is $1. I spent $240 on cost of goods sold. Boom! Well, that means you've got $260 left in inventory. So when the IRS pops up that screen that says how much is your inventory worth going forward for the next year, it's $260. Pretty easy math. You guys don't understand that? Rewind the video, listen again. You bought 500 items, $500. You sold 240 items. Average cost of goods is $1. 240 cost of goods sold, 260 left in inventory. That's the way I recommend for almost all of you, which will probably cover all of my bin shoppers, outlet shoppers, all of you thrifters, clothing. You're selling hundreds or thousands of items. You have tons of items in inventory. That's how you want to do it. And that's very, very easy. You can do that in a spreadsheet, or you can even do that inside of QuickBooks or inside of GoDaddy, or any of those programs will all take care of that. Okay, the third and final way that you can do it is sort of the way that I do it, and I probably don't recommend this for a lot of you. If you're experienced or you've done your own taxes or you're familiar with this, then by all means, email me, message me, I'll explain it further if you need. But this is zero inventory, and so essentially, I go out and I buy a pallet of clothes. It's 1,000 pieces of clothes and I spend $1,000 on it. And on the pallet, I get some really good Burberry and some Gucci or Louis Vuitton, and I sell a couple pieces and I get my $1,000. I sell 4 or 5 pieces. So my cost of goods for the pallet, say I spent, $1,000 on the pallet. Well, you cost averagers are gonna put it as 1,000 items, $1,000, $1 per item. Problem is, when I sell the Gucci or the Louis Vuitton and all the expensive stuff, I made $999 profit because I sold them for $1,000. Well, what I do is I put all of my cost of goods, the 1,000 total dollars that I paid, into the items that sell right away. Because some of those items may sit for a year, they may sit for 2 years, they may sit for 3 years. You guys know how it is when you buy a big lot of stuff and then all of a sudden some of it sells really fast and some of it gets pushed to the side. So I make sure that all of the cost of that pallet, of that purchase or whatever it was, goes into the items that actually sell and move. So at the end of the year, all the cost of goods is in the items that actually sold. So it is a cost of goods sold. Everything that's left over, that's like the junk or the donations or the stuff that's gonna sit for 2 or 3 years, that stuff has no cost because I assigned all of the cost to the stuff that's sold. So when the end of the year comes, the IRS says, how much inventory do you have left? It's 0. Either I donated it, I trashed it because it was junk, or it's just stale sitting inventory that's just gonna take forever to sell. At the point that it sells though, it has 0 cost. So I will profit 100% on those items, which means I will owe the taxes for that. So it's not like I'm getting out of paying the taxes for that, not at all. That item has 0, so if eventually a couple years from now somebody jumps into my building and goes, whoa, I love that jacket, I'll give you 50 bucks right now, it's a $50 profit. So keep that in mind when you have inventory that has no cost assigned to it any longer because you assigned it all over here, that you're gonna pay max taxes on that stuff at the point that it does, whenever it eventually sells. So that's the third way, and that's called 0 cost inventory, which is, you know, going forward year to year to year. Because remember, some of that stuff could end up, maybe it doesn't even sell this year or next year. Maybe it sells 5 years from now. You never know. I've sold stuff years later. So that's easiest for me. At the end of every year, I know that my inventory, whatever I physically have in stock, is 0 cost. Every dime that I spent this year was assigned to the items that I sold, and it's that simple. It is 100% allowed. The IRS is fine with that. They're gonna get their taxes one way or the other. Either they're gonna get it on the stuff you sold this year, or they're gonna get it when that stuff sells at a later time. It's perfectly fine. So if none of this makes sense to you, hire a CPA, spend the $300 for a year, and hire a accountant. I am not a licensed accountant, disclaimer, not licensed accountant, not a CPA, none of that. So I can't give you financial advice, but I can just tell you how I do things and how, in my opinion, you should do it. Take it with a grain of salt. Thanks for watching. Say hi, Dave. Say hi, Dave.
Hi.
Hi, Dave.
Hi.
Hi, Dave.
Saying hi to myself.
He's not saying hi to himself. Anyways, there's your cameo. You guys asked for him. I'm trying to give you little sneak peeks. Hope you enjoyed the tax video. Don't take it as a negative or a lecture, but I am lecturing you guys. Don't overthink inventory. It's very easy. Taxes are very easy. Everything very, very easy. And if you have any other questions, comment section down below. I'll check them out, and can't wait to talk to you guys again. See you soon.